So today is the 24th of December. This is the Finviz.com homepage. And with the Dow up 124 on Friday, the Santa Claus rally was most certainly in play for the indices. And we'll go to the bottom part of this page and take a look at the rest of these markets. We'll start off with gold and the rest of the precious metals. And this is the 5-minute chart. I'm going to pretty much be looking at the daily chart for all of these charts. Gold at 1,609. Does this look bullish or bearish to you? Well, this resistance was at a previous level of support in the area of course, and it went lower. Now, will this former level of resistance that became support once again become resistance if the market continues up further? Then the area of around 1680 would be definitely the most obvious spot, but it does look like it could be possibly be breaking down. And well, we've already found support a couple of occasions at the summertime resistance level. I guess if we break down below that, the next level seems to be 1400. Looking at the daily chart, silver. Well, the year started right in here, which was a shade over 30. So in the next week or so, if it can find a way to get about a 4% plus gain, then just maybe it will be that of a positive for the year. But regardless of the fact, it's going to look like I think it's called a hammer candlestick chart, because if the open's here, that means that yearly line, if you will, is going to go all the way up to 50 and pretty much close at where it started. Is that going to be bearish? Well, it might, but we'll have to wait and see. But as far as the current time frame, it doesn't look like it really wants to go higher now, but does it? I know I said earlier that, well, I think it's got a good shot at going up before the Christmas, early 2012 time frame, just because of another stock. That doesn't make too much sense, but we'll wait and see how that trend is playing out right now. But of course, it's really not looking the greatest. As far as platinum is concerned, well, we've established this lower high, this lower low, another lower low, and well, the next resistance level is the band roughly around 1520. This former level of support and consolidation area in October is the next resistance level, if of course it continues to go higher. And if not, well, we're at lows not seen in a year, so it's a down candle for platinum. Gold is higher. Weekly chart, well, maybe, just maybe, we test this previous 2009 resistance of about 1280, 1300, I guess, would be a better one for that. Move on to copper. $4 is at significant level. And did it find a way of breaking above it? No. So that is going to be significant resistance, but this chart's becoming more neutral from a downward move more than anything, as yes, we have a lower high from this one, but it is establishing nice support at roughly the 320 level now. And that's an extremely important level to hold. And what's extremely big is getting over 375 basically. And the reason why $4 is so big, and you can probably other charts might be better if you have more longer term, is what I mean to say. But resistance was so large, it managed to get above it. It stayed above it for a decent amount of time, but then broke through. So it really needs to make a higher low above this one here, which is why it's extremely important now for the level to hold as is. Let's now move on to palladium. And palladium is showing signs of going, well, has been neutral for some time, but breaking above and holding above the 685 mark is going to be 690 even. 695 is going to be very important for this market. Now let's go to indices now. We'll start off within the Dow Jones Industrial Average. And we have an inverted head and shoulders pattern on this particular chart with major resistance for where it is right now, because it's at the neckline of this pattern that it has now. Now based on the length of this, if it breaks through, we have a bottom here on the Dow futures at about 11.2. And the neckline, well, I guess, is at 12.2. So that's a difference of about 1,000 points. So using the length of that pattern should get us to breaking this 13,000 mark. And on the weekly term time frame, that would take us to the 2008 highs, which occurred in May. And then back to this resistance or level where it stayed within most of 2007, which is at the all-time highs. So that's the Dow Jones. Now the S&P 500 has more of a downtrend line to that inverted head and shoulders pattern. The NASDAQ is just choppy as anything, but it's showing a little bit of bullishness within the choppiness, but choppiness trumps all within this. The Russell 2000, very similar again to the Dow, but it's really weak overall compared to its previous highs, but its pattern with the same inverted head and shoulders sort of ordeal is in play. Now the bottom here is about 660, the neckline is 750. That's a difference of 90, which is up to 840, which would pretty much make it to the previous highs of this year. The Japanese stock market is in a downtrend. So let's move on. We've seen indices and metals. Let's move on to the energy sector. Looking at crude oil, and crude oil, this is a major Fibonacci 61.8 that I'm talking about. If it can really get a hold above this 102 level, but really make a break above 105, and again, like I say, maybe find support at 100-ish area, then that would be very big for the crude oil market. Natural gas is in a major downtrend, down to 310, and if you take a look at this on the weekly term time frame, the more often support's tested, the more likely it's going to be taken out. It looks like we're going to make a rundown for this previous low here. It looks like it's about 2.25, 230-ish or so. And heating oil is, this is just one sideways bull flag more than anything, with a little bit of downtrend or more of a negative correction, because it's pretty much neutral. But within the neutrality, it's near the lower end of the range, and it's back to a support level that hasn't been to for quite some time, and that's just neutral. Let's now move on to the meats, and we'll take a look at live cattle. Pork bellies, there's not much there, and that's a nice little bullish-looking setup in here, as it's had this previous resistance from April, and it stabilized within this area after it had its correction this summer. If we move this on to the weekly term time frame, it's looking to go to levels not seen in quite some time. And geez, I wonder what happened here. Let's move on now to feeder cattle, because I don't know, but I'm sure the Commodities Exchange has a good idea, of course, wouldn't they? And feeder cattle, now I'm trying to be serious here, but also realize that all of these markets are fraudulently traded, but this is how the price currently is at. This is feeder cattle, also in the same type of situation like the cattle, the live cattle that is. And again, looking at new territories, pork bellies, it's not even worth looking at. As far as the grains are concerned, we have corn, which has been in a downtrend for most of this previous end of this year. And I guess just like silver, you can see it close the year in here, so it's going to have a similar kind of hammer kind of candle associated with it. If you look at this within the weekly time frame, it's merely correcting within a bullish situation. So this is one spot where I would look at that candle, I'd be like, whatever, it came back to this 08 high. It's corrected a bit, which is kind of normal. As long as it establishes a nice higher low, and it can still go down to 500 and make that higher low, or 540, then it's all good, I guess. So okay, so let's now move on to the other one, soybean oil, which has been in a downtrend. It's at a significant area of resistance right now. And let's move on to soybean meal. Really not looking so good from this point of view. And in the weekly time frame, it's been nothing more than a neutral, choppy market for the most part. As far as oats are concerned, same thing on the daily chart, but this one here is approaching an area of previous resistance, roughly at about 275, upwards to about 3, and it's already found support there, or it's finding support, consolidating amongst that area right now. Let's move on to rough rice. We'll move this on to the daily chart, and obviously it's in a downtrend. It didn't find support at where it was supposed to. And what I mean by that is 61.8% from this low at roughly 1250 down to about up to about 19. Really, this was the area here. So this is obviously not holding the last rally, basically. Soybeans, obviously that's in a big downtrend as well, and a major sideways consolidation of the last 4 or 5 years, basically. Wheat is in a downtrend on the weekly term time frame. It's not looking so good as far as recuperating its losses from the 2008 crash. Let's move on to the sauce. There's really not, I was going to say there isn't too much in here, but cocoa, cotton, I guess we'll do everything but orange, or lumber, I should say. Now, daily chart for cotton has been a mess this year. So it's went from about 220, and it's currently now down to 87. So as volatile as silver's been, it seems that cotton's even more volatile, and it's taken that hit down pretty hard, to say the least. It's at this previous 2008 resistance level, which is at about 93, and that's where its highest point was. But the more important level is roughly at about 80, because that's where it had two hits in 2008. It consolidated there for the that's months 2 to 6 in 2010, and here actually 2 to 7, even 2 to 8, and that's where it is now. So whether it finds support there or not, I don't know, but it has been beaten down pretty big. As far as orange juice is concerned on this year, very much sideways choppy action, to say the least, and within that it's correcting through time, finding nice support at its previous level of resistance at about 157, no, excuse me, 157, 155. Okay, coffee on the daily chart has been in a downtrend, obviously, and it really hasn't found much, 61.8% from this low, but I don't know if this is a low. We'll see this on the weekly chart, and it's correcting what looks to be a significant point. It's hard to tell the 61.8% retracement on a linear chart, but it is, however, correcting from its last recent gain, and that's that. For lumber, it's not too bad of a chart. You can actually kind of read it fairly well, but it's been a sideways correction after it had its big fall early this year. It's been in a sideways correction for about 7 months, and it's been pretty much choppy for the last half decade or so. As far as the sugar is concerned, in a downtrend, and it's at this now most previous level of support, which is in the area from 24 all the way down to 20. So it can still go a lot more lower based on that. Looking at the weekly time frame, it's in a choppy sideways mess with a lot of indecision. How do I know it's indecisive? Because we have this low, we have this high. What are we going to take out first? We're going to take out 36, or we're going to take out about 13.5. Well, we had a shot to go here, but no. So we haven't broken this high, we haven't broken this low. Every time you do that, you're going to get a symmetrical triangle. You can find one there. We'll go to currencies, finish it off with bonds. I'm really only going to take a look at the US dollar on this one, because really this is pretty much a very meaningless chart, yet it means so much. And the 80 levels, and what I've been talking so much about, it found resistance there in the start of October, retraced lower, and if it wanted to continue lower, it was around 78, 77, where at 77.5 to 78, where the resistance was ought to be found. I found, excuse me, I found a little bit of resistance, pulled back, and there you go. So it breaks above it. Now we're at this 80 level. So far over the last few days, it's been finding support on a short-term level at this, rather than that of resistance. But the overall chart is nothing more than a major mess, as is the entire currency to begin with as well. The bond fund, which is very close to what TLT would look like, because it's very odd to see bonds going higher and stocks at the same time, but it is what it is. And as you can see here, it had this nice little gain, and it's correcting with an upward trend, which is fairly strong, to say the least. On the weekly term time frame, it's had this previous resistance in 2009 at roughly 142. And it's now back at that level, and it's unlike being there quickly and leaving, it's been stabilizing there now for the last 4 or 5 months, and the 10-year pretty much looks about the same. There's all the markets that Finviz has, and thank you for tuning in, and have yourself a happy holiday.